In this video, I'm going to show you how easy it is to use the Raiz app so you can start your investing journey today. I'll also cover all the fees, investing options, security, special features, and other important things you need to know before signing up. Let's get straight into it. Raiz is an Australian micro-investing app that allows their users to invest into the stock market at a very low cost and from the comfort of their smartphone. So if you are a beginner who's thinking about investing this year, then this app allows you to do so in a simple and relatively safe manner. And the main difference between a micro-investing app like Raiz compared to a regular investing app like CommSec is that 1. Micro-investing apps usually offer a few pre-selected portfolios for you to choose from, whereas you are on your own with regular investing apps. And 2. You can invest in smaller increments without having to worry about brokerage fees eating into your profits. So basically just think of Raiz as an investing app on training wheels for people who want to start investing but not quite confident enough to jump into the deep end yet. I'm now going to show you the investing options that Raiz offers. As you can see on the screen, the app allows you to select one of 7 pre-made ETFs that are ranked based on how risky they are. An ETF is a type of fund that typically tracks a particular index. In this case, the ETF is tracking an index that is made up of many individual companies. So the easiest way I can explain it is, if you buy one of these ETFs, you are buying into a basket of many companies or stocks instead of just one individual company. Generally speaking, ETFs are considered safer than individual stocks because if one stock underperforms, there are other stocks that can cover for it. So if we go back to the options, we start off with the least risky on the left and the most risky on the right. And the way I like to look at it, the younger you are, the more risk you can afford to take because you have more years before retirement age. So this gives your investment more time to handle all the ups and downs that the stock market usually goes through. And historically speaking, the longer your time frame, the greater your stock performance will be. Let's have a look at the first option, which is called conservative, and it is considered the least risky option on the list. So as you can see, this option is made up of 7 other ETFs, which covers a variety of different markets. So basically, it's an ETF of other ETFs. And by the way, these are actual real ETFs, which can be individually bought on the Australian Stock Exchange. You can even Google each of these ticker symbols if you want to know more about them. So you have 24.5% in AAA, which is a cash ETF. It's the equivalent of leaving your money in a high savings account. Then you have 13.5% in STW, which is Australia's large cap stocks. And by large cap, it means well-known blue chip Aussie companies like BHP, Woolworths, and Commonwealth. Then you have 3% in IAA, which is an Asian large cap ETF, which gives you exposure to large Asian companies like Alibaba and Samsung. Then you have 3% in IEU, which is a European large cap ETF with companies like Nestle and Mercedes-Benz. Then you have 30% in IAF and 23% in RCB, which are 2 Australian bond ETFs. Bonds are basically loans from an investor to a company or government, and it represents a promise from the borrower to pay you the full principal plus interest, which is usually in a form of a dividend. Bonds are considered safer than stocks. Then finally, you have 3% in IVV, which is a US large cap ETF with many famous companies like Apple, Microsoft, and Google. If you look through the first 5 options, they have the same 7 ETFs, but the weighting is different for each of them, depending on how risky you want the portfolio to be. So you have conservative, moderate, moderately aggressive, and aggressive. So I won't go over all 5 of these options, otherwise we'll be here for a while. I'll leave you to scroll through and have a look for yourself, but I'm sure you already get the gist of how each of these ETFs are formed. Let's move on to the 6th option, which is called Emerald. And this option is for investors who are into ethical investing, which focuses on companies that meet strict environmental, sustainability, and ethical standards. This option contains 4 ETFs. So as you can see, there is a fair chunk in AAA and IAF, which are cash and bond ETFs, just like the previous 5 options. Then you have RARI, which is an ETF that tracks Australia's large cap socially responsible companies. You also have ETHI, which has become a very popular ETF in the last few years as more investors are concerned about ethical companies. And this fund tracks the global socially responsible large cap companies. So basically, one ETF tracks ethical companies in Australia and the other one tracks ethical companies for the entire world. And our 7th option is called Sapphire, and it is considered the most risky option on the list because it includes a 5% allocation in Bitcoin. The remaining 95% are the same 7 ETFs as the first 5 options, with a slightly different weighting and a large emphasis on Australian large cap stocks. So if you believe in Bitcoin or you want some exposure in cryptocurrency, then you may consider this option. Then you have this last option that allows you to customize your own ETF and choose what you want to invest in and the weighting percentage of each investment. And it includes a few other popular ETFs, some of which were not included in the 7 previous options. So for example, you have NDQ, which is an ETF of the best tech companies in the US. You have HACK, which is an ETF that tracks the top global cybersecurity companies. So if you think this is an industry that will do well in the future, then you can consider adding some to your portfolio. And once you're done, they'll show you your total portfolio in a pie chart and how risky it is on their risk scale. Then you'll have the option to invest in this portfolio if that's what you want to do. Now that we know our investing options, I'm going to show you how to actually invest your money. So let's open up the Raiz app. And once you are logged in, it always takes you to this main page. Let's click on Invest. Now there are 3 main ways to invest here. The first method is a unique feature by Raiz called roundups. This feature allows you to automatically invest your spare change you receive from your everyday spend. For example, say you buy a cup of coffee for $3.50. Raiz will round it up to $4 and put the 50 cents change into your Raiz account to be invested. Then say you bought your lunch for $9.90, Raiz will round it up to $10 and put the 10 cents in your Raiz account. And once your roundup reaches $5 in total, Raiz will automatically invest it for you. So to set up this feature, let's click roundup and let's enable auto roundups. Then click this settings icon at the top right. You can now link your bank account by clicking add spending account and just follow the prompts. It's very easy. And as you can see, my bank account is already linked, so everything is already set up for me. And you can further customize how to use this roundup feature by clicking settings again on the top right. And if you don't like the roundup feature, you can simply turn it off here. You can also set the smart roundups to a higher amount. By default, Raiz will invest every $5 from your spare change, but you can increase it to $10 or more. And you can also change the whole dollar roundup to lesser increments if that's what you prefer. But personally, I think the nearest dollar is already reasonable. So this is just a fun and unique way for someone to invest consistently by doing everyday things. I'm sure you won't even notice the spare change is missing from your purchases, but over the long term, it is creating more money for you. And the second way to invest is by setting up a recurring amount. Let's click recurring and it will let you set up the amount and frequency. So for example, let's say you want to invest $50. You can now set it to invest $50 daily, weekly, fortnightly, or monthly. This is a great way to dollar cost average into the stock market and removes the emotions out of investing. Because once you've set up the recurring amount and frequency, you won't have to worry about it again. The app will just keep doing everything for you in the future. The third way to invest is by a one-off lump sum. You can do this by clicking deposit. So say you received $100 as a birthday gift and you want to invest it. You can go ahead and select $100 and click invest. Then they'll ask you to confirm. Once you are sure, click invest and they'll automatically deduct the money from your bank account and invest the money for you. Now there is a fourth way to invest, and that is through Raiz Rewards. So Raiz has a partnership with multiple companies and you can link your credit or FOS card to earn Raiz Rewards when you spend money with these partnered companies. So you can have a look through their offers, and if you're going to spend money with one of these companies anyway, then you may as well get some cash back on your money and have Raiz invest it for you. Let's talk about performance. You can check your portfolio's performance over time by clicking performance detail. This will show you how your portfolio has performed over a given period of time. Generally speaking, since most of the ETFs are tracking all the different markets, your performance will mirror the performance of the entire stock market. So if we are in a bull market, you can expect your portfolio to be up, and if we are in a bear market, you can expect your portfolio to be down. But please try not to check your portfolio too much. Even Raiz has come out and said this is not a get rich quick scheme, and it will take a while for your money to grow. It's important to think long term and let the market do its thing. Let's now talk about the fees. The good news is most of the fees are quite low. Unlike traditional online brokers that charge about $10 to buy or sell stocks, Raiz does not charge any brokerage fees to invest. So you can choose to invest in smaller increments and not have to pay a brokerage fee each time. Instead, they charge a monthly fee depending on which portfolio option you choose to invest in and how much you have invested. For the first 6 options, so that includes conservative, moderate, moderately aggressive, and emerald, they charge a $3.50 per month maintenance fee for accounts under 15K and 0.275% per year for accounts over 15K. For the Sapphire portfolio, they charge a $3.50 per month fee, regardless of how much you have invested, as well as an additional 0.275% account fee per year. For the custom portfolio, they charge $4.50 per month for accounts under 20K and 0.275% per year for accounts over 20K. Raiz does not charge any fees or penalties to deposit money into the account or to withdraw your money from the account. It is also important to note that Raiz does not charge any maintenance fees if your account is zero. Let's now talk about security. So is Raiz safe to use? Well, in terms of legality, Raiz is an ASX listed financial services company with an AFSL license, and they are heavily regulated by ASIC, whose role is to promote a fair financial system and to protect Australian investors from any funny business. So it's fair to say Raiz is a legitimate company. And if they were ever to go bankrupt, the money in your Raiz account is held by an independent custodian. So in the event of a bankruptcy, they'll hold onto your assets in trust, so your money will be returned to you. So legally speaking, Raiz is as safe as you can get in Australia. However, in terms of how safe investing is, that is a subjective question. History will show us that investing in the stock market for the long term is usually a good idea and will yield good returns. Timing the market is better than timing the market, so it's important to give your investments a long-term horizon. Having said all this, nothing is ever guaranteed in the stock market. Past performances does not always equal future returns. Investing is always a risk, and that is why Raiz offers a diversified portfolio to try to reduce that risk. So how do you sign up? So if you decided you want to give Raiz a try, then it's very easy to sign up. You can either sign up from their website on your computer or download their app and sign up through your smartphone. Raiz also has a promotion for new users, so if you would like to receive $5 for free just to sign up, click the link in my description or enter the code provided if you're signing up through the app. Either way, the application process is just like applying for a new bank account. You just have to provide your personal details and it should just take a few minutes. finance. Then it'll take about 1 business day to approve your application. And once they approve, that's it, you're ready to go. By the way, if you made it this far, the secret word today is coffee, so comment that down below to let me know you are a true OG. And if you're new here, consider subscribing to the channel because I make a ton of personal finance videos like this and you don't want to miss them. So this is how to use the Raiz app. I hope this video helped you out. And if you want to learn more about micro investing apps, then check out this video on screen where I provide a full breakdown of the CommSec Pocket app, which is a good alternative to Raiz. Thank you for watching, I appreciate you, and I'll see you in the next video.